What are some of the best stocks to invest in right now under $100, and what makes $100 such a special number when it comes to the stock market? Let's go ahead and break it down. Now, yes, you can make money almost with any stock regardless of what the price is. However, when it's under $100, there is something special that you can do with option trading. I'm going to show you exactly what trading strategy I'm talking about and how it works near the end of the video, so we'll make sure you stay tuned for that. But first, what are the stocks and why are they on this list? As always, you want to make sure that you see if it fits within your own investing strategy. Everybody's strategy is different, but I'll tell you this. The reason why I chose these is because, one, they're doing well. There are a few that I believe are undervalued, some by more than others, and they can make you money in two different ways. So the first one, you buy and you hold it. So let's go ahead and knock down the list. The first one is Royal Caribbean, that is RCL. The stock is up 40% in the last 6 months and up 104%. Yes, 104% over the last year. I would consider this company slightly overvalued. The valuation that I came up with was about $100 a share. So if you can get it for under $100 a share, I think you won. I think you're going to win regardless with a company like this. But if you get it for under 100, great day in my view. Also, the Norwegian cruise line, NCLH, is also very good. They're up 24% in the last 6 months and also up 24% over the last year. It's very rare that those two things line up. And I would say that anything under $26 in this case is good. I would say that is undervalued. The last time I checked it, it was about $24 or so, and obviously the market moves. So by the time you watch this video, hey, the prices do change. Right now, they're all under $100 at this point in time. Now, interestingly enough, you can really throw a dart at any cruise line company, and they are doing well right now. I think they're still in a post-pandemic surge, because during the pandemic, things got wonky, especially with a lot of these cruise lines, but they do seem to be doing a lot better right now. The next one is Micron. That stock symbol is MU, up 20% in the last 6 months, up 27% over the last year. That one is interesting because everybody's talking about NVIDIA and everybody's talking about ON Semiconductor and all of these other semiconductor stocks and tech stocks, and nobody's saying anything about Micron, even though they're doing pretty well. Now, no, it's not up 200%, okay, so maybe that's not why people are talking about it in the exact same way, but it is a solid company, and it's been a solid company for quite some time. It ends up falling on a lot of people's value stock list. For me right now, for the price, I wouldn't say it is the best in terms of price, but it's still under $100. It is still doing quite well. If I had to choose between this and one of the cruise lines, I'm also going to lean towards the cruise lines. That's also because we have plenty of tech stocks that we talked about on the channel that are better in terms of returns versus Micron. However, Micron is under $100, okay? So that is the one to shoot for if you're looking at price right now. The next one here is one that I put nearly $10,000 of my own money into, and y'all saw the receipts and how well that company is doing, and that is PACCAR. They are a manufacturing company. PCAR is the stock symbol there, up 21% over the last 6 months, up 43% over the last year. I'm gonna circle back around to that and as to how I'm making money in two separate ways on that particular stock, okay? We're gonna come right back to it, but I need to cover this next stock. And this one is the Pulte Group. It is PHM as a stock symbol, up 23% over the last year, up 76% over, up 23% over the last 6 months, and up 76% over the last year. They're a home manufacturing company, and this one, I would say, outside of the cruise lines, has me to raise my eyebrow the highest, because it's just interesting, because I know we need to build more homes. I know that has been a focus because of how the housing market is and how expensive rent has gotten. So logically, companies like this that are building more homes, that are increasing supply, should do quite well right now. That's just, on paper, that is what I would look for and what I would assume is going on here. Now, for me, if I had to buy something today, outside of the cruise lines, this is the one I would really look forward to doing more research into, because I'm curious to see if what I am thinking matches up with the results of the company. That is what I want to know, and I really want to look into their annual statement and see what the CEO is saying about that fact, and if they are seeing a surge in revenue due to people trying to catch up with housing supply and demand. I'm curious there. I also want to see whether or not this links into the infrastructure bill. It probably could. It really depends. There's a lot inside the infrastructure bill outside of just roads and bridges. So very curious to see how the company is doing. And does hurricane season matter? Does some of the warming in certain cities matter? Are people leaving a place like Phoenix where it's very hot and they're running out of water and building houses elsewhere? I don't know. I'm curious. These are the things that I would look forward to if I were considering buying this company today. All right, so that is what we have. But how do you make money in two ways? Okay, so the first way is the normal way, regardless of how many shares you have. You buy it for a certain price. Hopefully that price rises and you can sell it for more. For example, if I am owning Royal Caribbean, I buy it at $80 over time, not overnight, okay? Over time, I buy it for $80 and the company goes to $90, I make that $10 for however many shares I have. Cool, okay? That is how most people make money in the stock market. Super straightforward. And I would say that that is the easiest way to make money in the stock market. It's just what you do. You buy it for a certain price, price goes up. Now, to enhance your gains, you can do something called a covered call option, all right? What is that? A covered call option means that you sell an option contract, which means that you must, okay? You are required to sell it at a certain price. Now, if I buy a stock at $80, what I would want to do is to sell an options contract at $90, meaning I buy something at $80 and I am required to sell it at $90 if the stock gets to $90 per share. If the stock doesn't get to $90 per share, what happens? Well, I still own the stock, everything's fine here, and I get the money from selling the contract, okay? So I say, look, I will sell this contract to you, or I will sell these stocks to you, my 100 shares to you at $90 a share, but you gotta pay me for that contract. So I'm making money from holding the stock and selling the contract. What are the pros and cons here? Well, the pro is, check out what I just said. If I buy something at 80 and I'm forced to sell it at 90, what happens if it goes to 85? There's a catch there. That means that my stock, my shares have made money from 80 to 85, and I made money from the contract, but I didn't have to sell it to anybody because it did not hit 90. And then the next month I could say, my stocks are 85, I'm going to sell it to somebody at 95. And if it doesn't get to 95, now I keep rolling it out and pushing that price forward for as long as I choose. What happens if it does hit that price? Let's say I buy it at 80 and I say I will sell it at 100, right? I have a contract at 100. Well, I make the difference between 80 and 100. I am basically locking in a gain because I have to sell it for more than what I paid for it. So that is the advantage of a covered call. It is very simple to do, very easy to do. What are the downsides? Well, I have to have 100 shares, which is why with this list, I want to make sure it's under $100 because it's easier for most people to get 100 shares of a company that is $25, $26 versus 100 shares of Chipotle right now. Okay, the company is well over $1,000. That is a lot more difficult for the average person to do. So that is why we focus on these particular companies. What if you could say, well, what about a company that's $5 or $6 or $7? Would that not be easier to do? It would be, but that doesn't mean the company is quality because those companies can fall in value. You can start to sell these contracts and things get really messy very, very quickly. I'm telling you from experience because when I first started investing, that's what I thought. Let me just go buy a cheap company, get 100 shares of those, and just sell covered calls all the time. No, it doesn't work like that. It does not work like that. And also, let's say that you sell a covered call and things work or don't work, at least I know I own a company that's quality. At least I know I have a Royal Caribbean. I know I have a PACCAR where, hey, I know this company is legit. I don't have to sell those calls at all. I can just hold on to it and allow the company to grow. So that is what I would argue is one of the best strategies to grow your wealth and also get a little bit of passive income as well. If you want to learn more about options and how they work or other stocks to buy, I've covered all of that stuff on the channel, and these are the videos that you want to check out next.